Your financial advisor charges 1% a year. It sounds like almost nothing. That is exactly why it goes unnoticed. Over a lifetime, 1% takes about a quarter of your nest egg. Here is the number your advisor never puts on the chart. 1% feels small because you compare it to the wrong thing. You compare it to 100% and figure 99% stays invested. But the fee is not charged once. It is charged every year on your entire balance, on the money you put in, on the growth, on last year's growth too. And it is taken whether the market rises or falls. You never write a check for it. It is deducted automatically every quarter. A cost you never feel is a cost you never question. The right question is not whether 1% is a fair price. It is what 1% compounds into over the years you stay invested. The fee compounds against you as your money compounds. That is the number that matters. And almost no one ever calculates it. Here is how it works. Say you invest $100,000. You leave it alone for 30 years. The market averages about 7% a year. With no advisor fee, it grows to about $760,000. Now take the same money in the same market. This time you pay a 1% annual fee. It grows to about $560,000. The fee did not cost you 1%. It cost you $200,000. That is about 26% of your entire nest egg. A quarter of everything you built gone to a 1% fee. And here is the part that removes every excuse. That quarter barely moves if the market does better or worse. 5%, 7%, 10%. The fee still takes about a quarter. The loss does not depend on the market. It depends only on the fee and the number of years. It is the one outcome in investing you can predict exactly, and it is working against you. Now picture the other end, retirement. You are living off your savings. The safe drawdown most planners use is about 4% a year. Your advisor still charges 1% of the balance. 1% of the balance against a 4% withdrawal. The fee is taking 1/4 of your retirement income, $1 out of every 4 you spend. Hand it over before you ever spend it. The fee also grows exactly as you succeed. 1% of 100,000 is 1,000 a year. 1% of 1 million is 10,000 a year. The fee scales with your balance and only your balance. 10 times the assets is 10 times the fee. And 1% is often not the whole cost. Many advisors also put your money in funds with their own fees. 1% to the advisor, 1% to the funds. 2%, all in. At 2% over 40 years, the fees take more than half of everything the money would have become. Understanding the math still does not make most people cancel. Here is why. The fee is invisible in practice. It leaves in small pieces every quarter with no bill. You never feel the withdrawal. And your advisor is a real person you know and trust. Firing them feels personal. The fee never feels like a cost, so it runs year after year, taking its quarter in silence. So here is what the math actually tells you. First, this is not an argument against advice. It is an argument for knowing exactly what you are paying for. A good advisor can earn the fee back. Tax planning, estate planning, and preventing a panic sell have real value. Research suggests good coaching alone can be worth more than the fee. The fee is only a loss when you get none of that. So calculate it in dollars, not percent. 1% of your balance every year for 30 years. Then ask what you receive in return. Second, know that lower-cost structures exist. Flat fee and hourly advisors charge a fixed amount, not a percentage of assets. The same advice can cost a few $1,000s. A flat fee does not compound. A percentage does. 1% sounded like nothing. Over a lifetime, it is about a quarter of your nest egg. The fee was never the small number on the page. It was the quarter of your retirement you never saw leave.